Hello, everybody. It's Dr. Rick. It's Monday morning, so you know what that means, right? It's Money Monday. So we're going to talk about two different topics today, and I'm going to get to that very shortly. First of all, I want to challenge everybody to focus and be on your best game. Understand that you have 86,400 seconds in every day. What does that mean? That means that you need to be able to manage your time. Obviously, there are going to be some things you're going to want to do. It's not about working 24/7. It's about having a prioritized approach to life. How much time are you going to give to your family? How much time are you going to give to your peace, your tranquility, and your recovery and restoration? How much time are you going to give to the grind? But when you're giving it that time that you have allocated for the grind, you need to be grinding. You need to be giving it to it. You need to be planning. You need to be meeting people. You need to be connecting. And so that's my challenge to you. Maximize that 86.4 because whatever you do with those 86,400 seconds are going to determine the outcome of your life. Um, so once they're gone, they're gone. All right. So today we are talking about this Money Monday. We're going to talk about the front end and the back end today. And there's a reason for that. Today is the next to the last day that you can enroll in the Legacy Wealth Academy masterclass for wealth building, which is a 6 to 18 month class. I'm going to say an 18-month class because you've got to be a full-time, all-in person to get it done in 6 months. I was a little aggressive in that. I tested it myself. But after running it by more people, it was like, no, 6 months, nah, everybody ain't gonna do that. So let's just say 6 to 18 months. So uh, I say make it for anywhere from a year to 18 months that you need to take this course. But this is comprehensive, everything you can imagine. I'm excited because yesterday we sent out the course syllabus to those who have signed up for the course, and it's all that. So again, uh, this is the last day. Tomorrow's the last day you can sign up for the promotional price, which is $9.97. And this is imagine it being a college course. It would be on steroids. It's comprehensive. It's lectures. It's vehicles. It's principles. It's philosophies. It's training on reading financials, understanding tax laws, understanding the importance of protecting yourself against the primary cost influencers in investing, which isn't the actual investment, is taxes and the cost of trading or the cost of the fees and commissions that you're going to pay your advisors and all that other stuff that you need. All of that stuff's in there. And there are several courses within the course. Unbelievable. But this is going to be tomorrow's the last day that you can get it now. After tomorrow, it goes to the regular price of $2,595. Still a fraction of what this course is worth if you apply yourself and use it. And we're going to talk about some of that later on, but I want you to get it. Also, for people who are saying, well, I don't have anything to invest. For $397, you can have a business online within 7 to 10 days with the 7-day online business launch course that I've been sharing and teaching. I've taught it a few times online. I got the lectures from the classes I've taught, but it's a self-paced course. It's also in the box. So there's absolutely no excuses. And let's get into this because I have a client in about 35 minutes. So I'm going to go ahead and get into this. Look, there's the front end and the back end of this money thing. The front end is generating revenue. The back end is expanding that revenue and creating a vehicle through which that revenue starts to work for you and it generates more revenue, requiring less and less of your involvement to create the income and the lifestyle that you want. That's called being wealthy. When your money is supporting you and you're not having to work for your money is working for you. That's a simple definition. The front end is everybody's talking about, well, I don't have anything to invest. I need more money. I need more money. I need more money. A bunch of people are sitting around waiting for a certain dollar amount because they have this idea that they have to have this amount of money to get started, and they never get started. The worst thing that you can do in the challenge to build wealth is wait. Wait for the right amount of money. Wait for the perfect time, and wait till the kids leave the house. Wait till this balances out. Wait till we pay that off. And the bottom line is your time is passing. If you want to get shaken into a state of doing, when I first start learning about the index, like Vanguard, S&P 500, where you're compounding your investment annually, and you're looking at how it grows over time, one of the best long-term vehicles you can have. Everybody should have an index, which is a passively managed mutual fund, which you're going to have 200 to 500 of the top performing companies that are publicly traded grouped into an index, and you buy into it, and it performs consistently. The S&P has produced 8.2 to 10% annually, compounded annually, like clockwork. Not saying that something can't go wrong, because it can. There's no 100% guarantee in anything, but this is what the S&P is doing. Go to any online compound interest calculator, type in a number you want to reach in a certain amount of time. Then it's going to tell you how much you have to put in every month or every year at a certain rate. You put in the interest rate, be conservative. Instead of putting in 10%, put in 9, put in 8.2. But I haven't seen anything lower than that on what I've studied about it. Here's what really got me. By the time I did this, I had already been sold on doing it. So I didn't do it for that. I went to go see what it would take from where I was starting to be okay when I got to a certain point in age. And what actually happened is, because my mind works 100 miles an hour in every direction, I have to really tame myself down all the time, is I saw how much money I had lost by not doing it and starting earlier. The earlier you start with this indexing thing, the quicker you can retire, and the more money that it makes for you over time. And let me give you an example. Somebody who says, just say you're only going to do it for 20 years, but you're going to collect on what you've put in it at 65. The person who starts at 20 and stops at 40 will have more money than the person that does it at 40 and stops at 60. The compound is still working those years that they've stopped putting in. You're not going to take your money out. You're just going to stop contributing in 20 years. The person who starts at 20 will have more money at 65 than the person who starts at 40. They both put in for 20 years, same amount, but one's got consistently more than others. And that's what really got me, is because I didn't know and understand it. And so I had to learn about it. But when I learned about it, it's like, whoa, okay. So, and here's the thing, most people who are not in the process of building wealth, and there are different elements and components of this thing. It's not about all playing big, man. I did this. I bought this many properties. It's about getting started. And one of the first things that you've got to do in order to start building wealth is start paying down debt. Why? Debt is the number one enemy of wealth. When you are calculating your net worth, you're taking all of your assets, things that have value that you hold and own, and you're subtracting your debt and things you're obligated to pay others from that, and that's your net worth. So your net worth is going to determine the level of your wealth. So you need to be paying down debt. That's a part of wealth building. People don't get that. You should only be going in wealth when you absolutely have to, or when the debt is actually going to produce a revenue generating mechanism. In other words, I'm getting a loan to start a business. I'm getting a loan to invest in this opportunity. And obviously that's still a risk, but you've got to be able to learn how to calculate risk, something that you're actually going to learn in the Legacy Wealth Academy. So anyway, you've got to get started. So what you'll find out is the longer it takes you to get started, here's the beautiful thing. You don't need $5,000, $10,000, $20,000, $100,000 to get started. Everybody's thinking, if you don't have this surplus of cash, I'll only make X, Y, Z. The two case studies that come to mind most to me are people who absolutely did not have money based off of the natural human rationale. One made $14,000 a year. The other one made $12 an hour. Now, the $14,000 a year was actually more than the $12 an hour because of when it was. It was a lot longer ago. But this guy was encouraged to take 20% of his income, which he initially said he couldn't afford to do. But the person who was wealthy, who was advising him, told him he couldn't afford not to. So he takes 20% of his income before he does anything else with it. And he was investing it in the mechanisms and vehicles that he had been advised to invest it in. He never stopped working at UPS. His name is Theodore Johnson. Look him up yourself. Never stopped working at UPS, retired from UPS, but when he retired, he was worth $72 million. Imagine that. You got a millionaire throwing packages right next to you. You don't know it. And it's happening more often than not. It's some people who are just like that. They are, and you got to understand what defines a millionaire. Having $1 million in your bank account isn't what defines a millionaire. It's having $1 million in net assets. And the average millionaire isn't going to have $1 million of cash laying around in the bank account or anywhere else. It's going to be in something that's doing what? Producing a higher return of revenue than that 1 or 2% or 3% that they're getting in any bank, any checking or savings account. Just simply makes sense. It doesn't make sense to have cash, which in and of itself is a horrible liability because it's depreciating in value at a remarkable rate. Anyway, so the first thing that you've got to do is you've got to say, no matter what, I'm going to do something. Here's the thing. Cash App allows you to invest in the stock market in I know in Bitcoin and other cryptocurrencies, but definitely stock market. You can go on there, you can buy, you can sell, and all that other stuff. But do some research. There are some just easy ones that you can get off into just for the sake of having and holding and learning the game that are pretty much going to make you safe. And you can learn and read about all that. You need to do a lot of reading. You need to do a lot of understanding, because one of the first things that you're going to learn in the Legacy Wealth course is know the game before you start. Do enough reading to understand. Here's the first thing I'm going to tell you about the stock market. It's a zero-sum game. What does that mean? For somebody to win, somebody's losing. So you got to understand that when you go in there, you don't want to be the person that's making another person rich. You want to know one of the quickest ways that happens? That happens when you go in and there's a downturn on the market. For whatever reason, the market corrects and starts downward. You're in a bear market now, and it's headed towards crisis mode. And hopefully it won't reach crash mode, but it's headed down. The stocks that you own in the market, the value, the price of the stocks is dropping. You panic and you sell. At the moment you sell, you just realize that loss. Until then, it was simply movement in an asset. You still own the asset. And so if the asset recovers, you still own all the money back in the recovery. And many times when the market corrects itself and moves back up, depending on the length of the downturn, it normally overcorrects. And so your stocks go up. And in many instances, will be worth more on the recovery than they were before the downturn. You're not. I never advocate, even though you got people who live and die by day trading and other active forms of trading, in and out of trades this week, that week, 2 and 3 months. All of that to me is active trading. And while it can lead to rapid increases in cash flow and quote unquote getting rich, it's the fastest way to go broke. Absolutely the fastest way to go broke. It's like going to a casino in Las Vegas. You're going to win some, but the house always wins. So Ray Dalio, one of the people that will be featured in this course, runs the largest hedge fund in the world. I think he's worth like almost 40 billion. But he always says that the stock market is the only place where something goes on sale and everybody panics. And that's all crisis investors do, is wait on stocks to drop. These are the people that are in the zero-sum game to win when you don't know to hold and you sell. Before I learned anything about the market, I used to always wonder, who was the dummy buying the stock with the price dropping? That's actually the genius. He's called a crisis investor. He's literally sitting around waiting on the stock market to turn. It does. Every 4 or 5 years, like clockwork. Has been a little off the last 15 years because we've had some real strong downturns and we've had some pretty nice long-lasting recovery. So it's changed a little bit, but it's a cycle. If you pay attention, you go back 100 years, you pay attention, you'll see it. Here's the thing. These guys are sitting around waiting. Why? Because they know people are going to panic. People are going to sell off good stock because the price is temporarily dropped, and they're going to win. So you got to know how the game. So one of the things that you're going to learn is know how the game is played before you get in. Because if you don't know and understand, that's life, period. That's not just in the sake of finance and money. That's life, period. When you don't know how the game works, you get played. Politics, business ownership, working in corporate America, if you don't culture interaction, if you don't know how the game works, if you don't know what's going on, you're going to be taken advantage of. You're going to end up in a precarious situation. You need to understand things. We need to spend more time learning how things work before we engage them. We get taken at most major purchases because we don't understand how things work. It's worth investing your time to understand how things work so that you are prepared. That's something that, again, you're going to learn in the Legacy Wealth Academy. But that's the front end, is you need to be generating revenue, but you don't have. How much is enough? Because everybody says, when I get enough, I'll start investing. How much is enough? Here's the thing. For as little as $5 or $10, Cash App, there are a bunch of places you can go on now and start a cap. I love Cash App because you can get something for what, $5 or $10 you can buy, and you can buy whatever you want. It's a great place to start if you don't have it. And then there are so many other ones. I'm not going to them because everyone has their pros and cons. You need to go out and research. Some of the older ones are still some of the better ones. And we provide a list of these brokerages that you can go through and buy and trade online. So here's the thing. Get started. Whatever you do, you need to have some money invested in an index. And we share, like, again, the top 12 performers in investing, not the richest people in the world, the ones who got their money by investing. They have input into this course. I got the licensing to use their clips. I got a bunch of stuff. There's a lot went into getting this because I think it's going to be huge for people who would otherwise not have access to it. But you've got to be willing to get in the game. You got to understand it. Here's the thing. Most people already believe they're locked out. Most people believe because of whatever reason, and there are these different reasons, they can't get in, they can't get on. And it goes from my race, it goes from my socioeconomic background, it goes from my current income. You got to make a certain amount of money for you got to find something you can get in on. That's one of the reasons I love the stock market. It's not my favorite play, but it's there because I can buy a fraction of a share. I don't have to have the money. If a share of stock is $400 and I'm really liking this company, I don't have to have the $400 to buy one share. I can buy a fraction of a share. I can let that fraction of a share grow and then use the dividends to buy another fraction of the share. I can literally use the growth to grow it, to make it grow itself. There are so many different ways that you can play this game to get in, but what you cannot do is sit there and not get in. You need to be diversified, and that's the second part of this thing that I'm gonna get into. But one of the ways that you can increase your income, if you're talking about it, is get online. Get online and do something. Get online, start some type of revenue generating mechanism, whether you're blogging, vlogging, doing shorts on, and you can do shorts now. It's not just TikTok anymore. You do shorts on Instagram. You can do shorts on YouTube now, shorts on Facebook now. You can do shorts, obviously, on TikTok. Obviously, you need to know the platform you're on. You need to know the ins and outs of how everything works. YouTube revenue is going to consistently be solid. It's owned by the biggest juggernaut on the internet, Google. You're talking about the company that owns the two largest search engines in the world, which is Google and YouTube. And it's people making mad, sick, crazy money on there. Now, obviously, to me, the people who are making the most money are the people who are doing things I think that on the long term don't add. But if they're making a living doing it and that's something you're excited about, you need to be studying. Gamers are making a killing on there. There's a little kid. He's probably not as little anymore, because when I first found out about 5 years ago, he was probably about 7 years old. And he was making $11 million a year on YouTube reviewing toys. Now I can imagine that's the cutest thing in the world. That's Um, Another little kid named Kalen. He does little shorts where he's talking much yak, little black kid, and he's making and there's a big time YouTuber. I forget his name, but he's a big time YouTuber. He has something like several hundred. He's huge, 700 million subscribers, and he just paid for thousands of people to get LASIK surgery. Is the reason I even found out about him. But that's just one platform, just one way to do it. You've got affiliate marketing, you've got content marketing, you got copywriting, you got drop shipping. You got so many different ways that you can get on here, even if you don't have a product of your own. And I teach you how you can do it with little to no startup capital. You start in and you scale out. I show you how to do that. It's one of the things that I've used since I've been operating on the internet. It has allowed me to enter some spaces that I might not have been able to enter at the time that I started, and still make an impact, and still be able to grow out and scale out, and still in the process of scaling. But what I can tell you is, from where I started to where I got, it's amazing. And I just teach it to you, real simple, 7 steps. And for the people who know they're not going to follow through, or simply wants to take advantage of it, we have a done for you, where you can sit up and pay us, and we build the whole thing out for you based off of what you want to do. We build it out and turn it over to you. But anyway, that's the front end. So if you're saying you don't have enough money, you got access to the internet, go make it, because you can do that. But what you don't want is a long-term plan where everything that you're earning is what you're working for, because number one is there's only so much time in the day. So you're going to cap out on what you can earn. It's not scalable long term. Number two is, at some point you're going to want to switch and do things, and you need to be able to automate it. It's nothing like sitting up and creating a situation in which your money is making money for you. The second part of this is real simple. If I had to say, I'm talking to people who have taken the time to learn the basics about investing, so you know a little bit about the game. What's the most important thing that I'm going to push to a person who knows? Allocation. Allocation, allocation, allocation. What's allocation? It is where you place your money. Number one is, you want to place your money somewhere that protects it against certain things: taxes, high fees, market volatility. And it starts with a simple word that you've heard a million times, even if you've never invested in your life: diversity. You want to diversify across multiple assets. You want money in real estate, money in the stock market. You want to be on multiple. You want multiple assets, even in the stock market. You want multiple industries. You want to be able to hedge against volatility in one particular industry. And the way you do that is by being very aware of multiple assets that you're going to invest in, so that they hedge. So one goes bad, the winnings in the other will hedge against that loss, and you still get gains. That's the way you want to do it. Obviously, it takes time to learn, to read, to understand, but you can do it. Again, where I start out with telling anybody: index, compound growth index. Start there, and then work your way out to learning other places. They're just some easy winners. Long term, Coca-Cola has done well. Even though I won't invest in McDonald's, they've done extremely well. They continue to do well. Worst food on the planet, but their marketing is exceptional, and their returns are consistent. They're still popping them up everywhere. So McDonald's, obviously, major player insurance companies, and even some smaller mid-sized insurance companies. Insurance companies are always going to be good. They're the ones investing the money. So they're investing money that you're paying them. And then, the whole thing. So plus, you got any company that's got a bunch of actuaries working for them are probably going to be pretty good in how they move and handle their money. Insurance companies, and a bunch of other things. Also, learn how to read and mirror the major players. Read about what Warren Buffett is doing, Jack Bogle is doing, Carl Icahn's company is doing, Ray Dalio, David Swenson, all these different guys. Read what they're doing, follow suit. You're going to be doing it at a much smaller level, but you're going to be getting the same percentage in returns. You just have to understand this is a slow process. Then you got to be willing to do what's necessary to take advantage of opportunities. And whatever that means, I don't tell anybody what they should do with their money. I tell them what the options are, and I tell them what's the most way, but you have to make a choice. I've had people take out loans to work with me because they saw the value. Then I've had people not even jump on unbelievably reduced price to work with me. Two people saw different values. What I can tell you is the people who work with me win. But you have to see the value in it. Same thing with anything else you invest in. You got to be able to see the value. It's got to make sense to you. Now, the thing is, nobody's perfect. You go back and ask any of them guys that I mentioned, and they will tell you that not even they can predict the market. They can reasonably determine what companies are going to perform long term, but they can't predict the movement of the market. Too many influences, too many things that can happen that can make a market shift. So the idea, that's why I don't mess with actively managed mutual funds. They only win about 4% of the time. 96% of the time they lose, they fail. But the average person, that's all you hear them talking about, mutual funds. Well, passively managed mutual funds, which is an index fund, is a passively managed mutual fund, is flowing with multiple companies, so that even the ones that aren't performing are being hedged by the ones that are. It is, again, consistently producing $10 in compound interest in return every year. So these are the things that you can learn. These are the things that you can come to understand. So again, allocation. Learn how to diversify where you're putting your money. Learn how and knowing how. The next thing would be, and this is a plus, I didn't even mean to talk about this, but the next one is understand what it's going to cost you. Investing is going to cost you. It's going to cost you either in fees, it's going to cost you in taxes on your returns, capital gains, or whatever. It can cost you in fees if you're working with a financial advisor, commissions, and a number of different things. You need to know that one of the things that people that constantly talk about their 401k doesn't realize that the biggest hit they're taking are not in the losses of the stocks and the things that they're investing in their 401k. It's in the commissions and the fees that they are being charged to manage that 401k. It's estimated that that fees for 401ks on a national level annually reach $17 billion. $17 billion in fees, most of which people don't even know exist because they can't read the financial statements and all the work. So again, things that you need to understand. You need to be aware of this thing. You need to have an understanding. The things that we invest time in doing that don't produce anything of value needs to be invested in the things that can help us change our lives. It's that simple. We spend a lot of time, and don't get me wrong, I like to laugh like the next person. I like to do a lot of different things and enjoy myself. One thing that Mary used to say, she used to always say, they knew how crazy you were, they wouldn't believe it, because I'm always serious whenever I'm dealing with what I'm dealing with in the public or online or whatever. And the crazy thing is, I love having fun. I'm keeping everybody laughing. I'm always starting mess. But when it's said and done, I'm probably one of the most avid readers on the planet. Literally, for the last 20 years, I read 100+ books a year. I am not perfect. I don't always make the best decisions, but I try to make the most informed decisions. And that's what I'm going to challenge you to do. Know how the game is being played and then make moves. You can't sit there and watch from the sidelines. I have sit there and watched people in many different areas of life be very aware, but afraid to get in the game. They can tell everybody else what should have happened or and I mean, with high levels of accuracy, but they're not in the game. Why? There's this trepidation, there's this fear of the unknown. The thing is, you're going to take some bruises, you're going to have some setbacks. Oh, trust me, it's going to happen. But when you know the game, when you have confidence in yourself, you get up like every other person that has been successful in this world. You dust yourself off, you square your shoulders, and you go back in and said, okay, I'm going to do it over. I've had to rebuild my whole situation from the ground up once. I've had to rebuild it. I built it twice. I haven't gotten back to where I was at first, but I tell you what, I am blessed to be where I'm at. I am grateful to be where I'm at. And it all came, hey, took a hit, but I didn't panic. I didn't go into victim mode. Man, why is this happening to me, man? Okay, no, not to do that again. I should have done it this way, should have done that way. I'm going to try this new thing. Maybe it was a redirection. Maybe it was to get me off of so much breaking model, so much things that was pulling me so many different directions, and to put me in a space where I can touch more people. And that's exactly what it did. It put me in a space where I can touch more people. It put me in a space where I had more control, with less energy invested, and I was able to give more of myself and reach more people. But the way I was going, I was good, but I was also distracted with myself. And I have no problem telling people I was feeling me in my 30s. Oh man, I was feeling me. And I had to readjust. I had to rebuild. I had to reevaluate. But what I moved into was this unbelievable space where I measure my success not by the zeros in digits, but by the impact. The money will take care of itself. But when you're having an impact in the lives of other people, that's unparalleled to me. It's the most important thing. Loving my family, having a positive impact in their lives, and impacting people in my periphery and at the edges of my reach. And that's what matters to me. And I've created a space where I get to do what I love and get paid. That I can't tell you how blessed I am. But here's the thing. In order for you to be able to do any of this, you have to take a step. Now, that's going to be up to you. I'm going to get ready to get out of here. Like I said, tomorrow is the last day. Today and tomorrow is the last day to sign up for the Legacy Wealth Academy course. It's basically, let's just say, an 18-month course. I was able to do it in a lot less when I test ran it, but we've also added some elements to it, and I do things a little differently. So I've been told to call it a 6 to 18 month, just in case, because people do things different, and everybody's got lives to live. And, but it is comprehensive. If it's something to know about wealth building, it's going to be mentioned in here. There are things that will be covered in great detail, things that give you the knowledge you need to do what you need to do. But here's the thing. There's no amount of knowledge that is going to change your life if you don't apply it. Knowledge, it's been said so many times that knowledge is power. No. Knowledge is potential. Knowledge doesn't become power until you effectively and accurately apply it. That's when it becomes power. Just simply knowing it doesn't make it powerful. It means you have the potential. Not until you apply it does it become power. And that's the thing that I want to encourage everybody to do. Learn and apply. Learn and apply. Advance yourself. Be prepared to go the distance. Be prepared to go. It's not the advantages or the disadvantages that you have. It's not the people you know or don't know. All those things are great. You want advantages when you can get them. You want to know people who can put you on. You want all these different. At the end of the day, the question is going to be, what distance are you willing to go? It's that simple. The distance you are prepared and willing to go is going to determine the outcome of your life. Because no matter how much you know, no matter how well prepared, you're going to hit some hardships. You're going to get knocked down. You're going to have some difficult moments. Are you willing to get up? Are you willing to square your shoulders? Are you willing to get back in the game? Have you declared upon yourself, no surrender, no retreat? It's that simple. So on that note, look, I'm going to get ready to get out of here. I really and truly hope that you take advantage of opportunities, even if those opportunities aren't with me. You've got to be willing to move. It's that simple. I'm going to challenge you to step out there and do something remarkable. Again, the links to take advantage of the course, as well as the 7-day online business course, which will allow you to start creating revenue online. Again, none of this stuff is get rich quick. I'm not here with no magic potion. I'm here with something that most people don't know that keeps them in a place that they don't have to be in. And it's a step-by-step process. that you have to be willing to consistently work. Sometimes you don't see it happening and working, but you got to trust it. On that note, look, I'm out of here. As I always say, I live my life on full so that when I leave this place, I die on E. I'm challenging you to do the same thing. On that note, I'm out of here. You guys have an unbelievable remainder of your day.